guys, it's your homegirl Therese Dorsey with Keller Williams Realty Center. And today I'm here with,
This is Jess with PNC Mortgage.
and we're going to have a dialogue today about credit. Credit is one of those things that is a lot to unpack there. So we're just going to have a conversation so you guys can understand credit. Okay, Jess?
Awesome. Yeah, absolutely. So we wanted to talk a little bit about, I think Therese is absolutely correct. It's a lot to unpack, right? A lot of people, I don't know about you, Therese, but I see in my conversations with clients, a lot of people will think credit is specifically about how they pay their bills on time. So if I pay my bills on time, my credit should be great. A lot of people actually also don't even know where their credit score is. And so, maybe they haven't had a need to really look into, or, what is being reported on my credit. So we wanted to just talk a little bit today about what goes into a credit score, what makes up a credit score. And then I think also just kind of tie in what does that mean for you in the home buying process?
I love that. And, I'm excited to talk about credit because I believe there's a stigma about credit, that there's a lot of shame in it when it's not great or good or excellent. And I don't remember being a young teenager sitting at the table with my parents or grandparents talking about credit and why credit makes sense and so forth. So I don't believe there should be a bad stigma about it. I just believe take action today if there is something that we need to work on in terms of credit, because some don't know what they don't know. And
absolutely.
Even as a realtor, when I speak to my clients and speak to people who want to purchase or want to rent, like anything new in this life that may require credit. So it's important that regardless of what your goals are in the near future or sure future, you should really start tackling your credit today.
I always say, I know you've heard me say this to my clients, credit is like money in your pocket. So when you're going through a process, like a major purchase, like a home purchase, I think it's incredibly important to understand how credit can impact your options. The better your credit, the more options you have. But I think it's important. I wanted to highlight on one of the things you just said, that there's a stigma attached to credit. Maybe my credit's not in the best place, and I think it's important to remember that life happens. We all go through things in life that have an impact on, our overall picture. But having the knowledge and the power, knowledge is power, and having that information in front of you to help you to get to a better place, like what things can I do now to help myself to improve my credit, I think is really, really important. So I think that's really a big part of the reason why we wanted to do this topic on today's call.
And Jessica, you said it last week and you said it again today, knowledge is power. And that is a part of our platform. That's why we're here, just to give the information and hopefully people, utilize it to better themselves. So, all right, let's jump right on in.
Yes. So, do you have the document, the FICO score breakout? I think that would be really great to show the viewers today what goes into my credit score.
Absolutely.
So Therese is going to show a document to you guys. Just going to share it here. But a lot of times people think we highlighted earlier how much is, how much I'm paying my bills on time on a monthly basis and my credit should be great. Well, actually the other huge chunk, that's only 35% of what makes up our score. The other 30% is how much we owe, amounts owed, right? So the credit bureaus really want to see what they call your utilization. So if you have a balance or a limit on your credit card of $1,000, they want to see you at 30% or less of your available credit limit. So not utilizing all of your balances or your limit, really keeping that balance low, as well as on-time monthly payments. Those are the two biggest pieces of your credit score. And then there are a couple of additional things that impact your score, like, how long, what is your length of credit history? What is your credit mix? Do you have a good chunk of each, right? The three main pieces of credit are consumer credit, which are credit cards, retail cards. Then there's installment credit, which is your auto loans or your student loans, right? You're borrowing a little bit more money. So that credit score is going to be graded a little bit more stringently. And then the third and the most stringently graded credit score is going to be your mortgage credit score. So those would be the three pieces of the mix of credit that people should be aware of. And then how much of it is new credit. So, and I think that really ties into your credit history.
Love it. And Jessica, as a loan officer, you guys want to see about 2 to 4 lines of credit, correct? When you're qualifying someone.
Yeah. And we really look at like a good, healthy 12 to 24 month history. And you'll see, you know, a lot of times people think, I don't want anyone to pull my score. One thing to remember in this process, when you're shopping for a home, if a lender pulls your score or pulls your credit once, you have 30 days to shop around to other lenders for a mortgage score or for a mortgage credit report without it impacting negatively your credit score. So a lot of times people are like, I don't want my score pulled again. Well, it's okay because it is your right to shop around for lenders. Mm-hmm. So just something to know in that process. You know, how does this impact you in the home buying process, right? Which is the whole reason why we're here. We want to help you. Every loan, so every lender gets to dictate the minimum required score that they use. So just be prepared to know that when you're shopping around for lenders, every lender will have a different requirement, right? Some will say my requirement's 580. Some will say my requirement's 640. But the other thing that dictates the loan, the credit score requirement is the loan itself. So, you know, if you're, you know, under 700, you may be a better fit for a specific loan program like FHA. If you're over 700, you may be a better fit for a loan program like a conventional loan. So, you know, your lender will help to guide you in that process depending on what your credit score is, because we want to make sure that we're putting you in the best financial position possible. So that loan program will also dictate, you know, what program you're going to go into. So credit is impactful in this process for interest rates. It's impactful for the process for mortgage insurance. If you're putting less than 20% down, your mortgage insurance, especially on a conventional loan, will be more volatile depending on, you know, the range of your credit score. It's impacted every 20 points on your credit. So and, you know, we can drill down into that, but it's so important in the home buying process. It is like money in your pocket.
Oh, wow. Awesome. This is some good information. It's just about what are my options in starting to build credit, and they can walk you through that process, Jess.
Yeah, correct. And I think another resource that is important to use, if you haven't taken the time to look at your credit report, go to annualcreditreport.com. You can pull your credit report once a year for free, and you can see what's being reported by the bureaus. I get asked all the time, why does one bureau report this number versus another bureau report a different number? Well, not every creditor reports to every bureau. So, you know, you may have one creditor that reports just to TransUnion and another creditor that reports just to Equifax. So a lender is going to use the middle mortgage credit score for your application. So just something to know. But annualcreditreport.com will have you validate your information, and they'll give you a full report. So if you've got collections on there, you'll be able to see what's being reported. You'll see your credit history, if there were ever any lates in your history. There's a bunch of stuff on there. So highly recommend before you begin the process, go to annualcreditreport.com and see what's out there.
I love it. And see where you are, right? Like not even just what's out there, see where you are. And you may have some work to do. You may be ready, but whatever it is, at least you know, and you have a starting point.
Yep.
One of the other things, in my opinion, score, I don't always think correlates to a risk factor. But I know in the lending world, right, you guys have, because you have certain requirements that you guys have to be able to help clients. And I know I've worked with people in the past that's like, hey, if you have a 580, we can help you buy a house. However, that interest rate with a 580 credit score is much higher. Can we talk a little bit about that, Jess?
Absolutely. So in lending, everything's about risk. And so we look at the totality of the scenario, not just credit score. Credit score is a piece of things. I always say that when we're looking at an application, we're going to look at your credit, your income, and your assets. Credit is the first piece that we look at to make sure that minimally you have that minimum expectation. And again, remember, every lender has the ability to dictate how low they're willing to lend. It really just depends on their appetite for risk. And every loan gets run through what's called an automatic underwriting system. So depending on the loan program that you're looking at, the automatic underwriting system will be different. So, you know, loan programs like FHA are a little, they have a bigger appetite for risk than, you know, loan programs like convention, but they'll look at your credit history, length of credit history in the the automatic underwriting system, what is your debt to income ratio? What is your loan to value? And loan to value just means how much money you're putting down, how much skin in the game do you have? And so, the less money that you're putting into the transaction, it adds another layer of risk. So there are things to look at as we approach, and finding the right program that makes the most sense for you is really the lender's job. We should be looking for what makes sense for you, not telling you what loan program to use, but showing you options so you can see what works for you.
And that's what I love about your platform. You give the buyers options to kind of decide what works best for them versus just putting them all in one pot,
Yeah, I mean, it's their mortgage. It's not my mortgage, it's their mortgage. So, my job is I'm working for them and making sure that they understand that they have options and what are the differences between them. So, I like to look at loans side by side. What does that monthly payment look like? What does it mean if your interest rate is X versus Y? How does that impact you monthly? And then how much are you looking at for cash to close, which with each loan program, it changes. So there's a lot of moving pieces to the loan process, but again, want our buyers to have it.
Great. So that was a lot of info today. And guys, like we said, we want to keep this recording for you a minimum of 5 minutes, most 10. But if you guys have any questions whatsoever, you can always reach out to Jessica or myself. Our contact information will be listed at the end of the video. And if this is your first time here, don't forget to like, share, and subscribe. That way, other people can get this information. It's extremely important. Credit is not just about buying a house. It's about putting yourself in a situation for your future self to be proud of what you.
Awesome. So I got a quote here. Credit repair is not a bill. It's a down payment on your future.
We really appreciate you checking us out.
Awesome. Have a great week.